All right, guys, to recap, Friday, May 24th, last day of the week, heading into Memorial Day, we open up overwhelmingly neutral, even though we were opening up with like a 10-point higher open than the previous days, yesterday's close. One thing I want to show you that we recognized in real time, I don't know how bearish it could have got you, but it would have got you less bullish, and it's the intermarket divergence. And I learned this 19 years ago. And it's simply looking at this yellow box and that yellow box. The chart on the right is the NASDAQ. This chart on the left is the ES. Inside those two yellow boxes are the highs, the new highs of the day made in each market. Pretty quick after the US Open, they make those highs. So then the NASDAQ goes down and the ES goes down over here. ES trickles back up. NASDAQ trickles back up, does something that's a little interesting. It makes a higher high right there. Come over here to the S&P. Do they make a higher high? No. Now there's a chance that they can make a higher high in real time. But you got to recognize that they're not. And what I was saying in real time during this happening is we have the fuel to go up and it can't do it. So if you're long, be careful. The NASDAQ is giving the ES fuel to go up. The NASDAQ's making highs and the S&Ps cannot. Does it make it super easy to say, sell it, we're going to do that? No, it makes it easier. That's all. And your compare-contrast technique allows you to see this high get taken out right in here. However, this high failed to get taken out right in there. All right. So now let's get rid of all those and go to our footprint chart and replay the instance of these 38 evens and watch what happens. Let's go this. And watch what happens here on the right side. Market already get a little bit weak. Something interesting happens on the rotation back up at around 38 even. I think it's got to come back off and then re-rally. But we get some stuck buying at the top of a little bit of a pop. You know that whole know where you're at on the map? Did we just rally? Did we just sell off when you're thinking of opening a position? How far is the rubber band stretched? A lot of people get short after it's too late. They get long after it's rallied. So you got to know where you're at on the map to know if possibly you're late. It's okay to still sell it after it sells off, but you just want to be less patient if you're selling after the rubber band stretched. Sometimes you ask yourself, should I get short or should I already be short? When you start asking better questions, you start keeping yourself out of bad positions. All right. Now watch this thing pop up a little bit from 36 half to 38 even, and then some buying comes in. Let me pause it a second and share the computer sound, and you could actually also hear the buying. So I'm playing it bottom right there. 38 even comes in. All this means is, hey, they should continue to walk it up. If they can't, which they're not, look out below. Not a hindsight's 2020 moment. Then she comes in with some aggressive selling to say, now should be the moment. It's one thing to take effortless losers if you're getting some effortless winners. And so not only does it cut that 38 that flashed in here, it cuts this aggressive buying that came in here at 37 quarter, and the downside was the right side. So two things today. The intermarket divergence after the open, NASDAQ Russell making highs, S&Ps couldn't. And then you get some buying that comes in, just can't rally it like it should. The better question, the most important question when trying to read and learn and understand order flow is, when does it tell me something should happen and it's not?
5 3/4.
And so many people will search and search and search order flow education and never get to that question. Buying came in. Why isn't it rallying? Starts to help really strip out randomness that otherwise this market's about, or this business becomes about. If you're watching this in the future, this won't be relevant, but happy Memorial Day for those watching it today. Guys in the trading room, have a safe weekend. Not going to give you upside and downside levels because it could very well dry up, be a very boring market. So
6
don't
3
be
quarters.
one of two sides on a holiday weekend. Usually afternoon traders on a
7 3
Friday,
quarters.
Memorial Day, Labor Day weekend are either the needy or the greedy.
6 half.